Hey everybody, what's up? This is Stock Retail coming back to you again in light of a lot of information going around on fully paid lending programs, the cost to borrow, and basically brokers asking apes to start lending shares. I wanted to share a little bit about what is fully paid lending, um, just how badly do the brokers want AMC shares, what does that mean to us, and even a little bit about some other tickers. So let's dive into this. As usual, my intent is to educate. I'm going to stick to facts, try to stay away from opinions, or if I say opinions, I'll just share them. Let's just jump in. So first of all, interesting, this is my own email, so I can confirm this is fact-checked, at least from my side, if you want to trust this bro. Um, so I asked my broker, you can see the top list here. I asked for just some borrow rates on Apple, Nike, Bed Bath & Beyond, GameStop, Amazon, AMC, Tesla, and Target. Just wanted to give them kind of a basket of tickers and see what they came back with. To be honest, I expected a small rate for all of them, but interestingly, you can see the reply here that only 3 of those are even in the fully paid lending program. You can see the 15% for Bed Bath & Beyond, about 11% for GameStop, and then interestingly 37% right now for AMC. So what is that rate? That is actually what E-Trade will pay me. I think it's a yearly rate. I guess I should double check that. But E-Trade will pay me that rate um, against every share I own. So just take kind of the value of the share and then multiply by this percent. And let's just say if you own a lot of shares, that's a lot of money, right? Those are loan shark kind of level rates. But let's not just look at E-Trade. Let's look elsewhere as well. By the way, before I do go farther, I am going to talk about what fully paid lending is, why I personally don't do it, and just kind of explore what does it mean. But at least I just wanted to share that rate because, boy, that's interesting. Feels a little squeezy to me, if I'm being honest. So all over Twitter, these are just a couple examples. So you can see one ape on the left had kind of said 35% rate at Fidelity, and then here's an ape on the right saying Schwab is offering 26%. So far, E-Trade, Fidelity, Schwab, some pretty big brokers are saying basically, please, can I get my hand on your shares? One other thing to note, maybe I don't see it in this email, but I had somewhere in the email, my broker basically confirmed this is my portion of the rate. But oh, you can see it actually. Here it is. So look at the top of this little box. This is what it was. Estimated customer rate after split. So meaning E-Trade's going to loan this out. A short is going to pay E-Trade a rate to borrow that. And that is over and above what E-Trade is going to give me. So they're just saying, here's your cut. But E-Trade, of course, is going to keep their cut. So super interesting that not only am I going to get 37%, E-Trade's getting something above that. Which tells me it's getting real expensive for shorts to borrow, which we know. We track that, right? You look at Ortex, you look at Fintel, we've seen the numbers. But just interesting to see it confirmed directly in my own inbox, too. And then, like I said, here's Schwab and Fidelity. So what is fully paid lending? Let's just talk about that. I'll talk about why I don't do it. You can see this is just from E-Trade here. You go check your own broker, learn a little more about it. Obviously, you could Google all of this stuff, too. Essentially, you're just giving your broker permission to loan out your shares. You can see you could sell at any time, you get daily income, you have visibility to what's on loan, and then they're saying, hey, it's super easy, please do this. But if my broker's telling me, hey, this is really easy, go ahead and do it, you understand there's something in it for them, right? They're not just like running a charity and being nice to us apes. So it's always worth kind of checking the fine print. So take a look at this part up here where it describes the fully paid lending program. And let's lean in on what does that actually say. Interesting. Why are people borrowing it? Kind of a duh here, but E-Trade's even putting this language right there. They're loaning their shares to other investors, and it happens when there's high demand, often due to short selling. Okay, so nothing too surprising there, but still interesting to note that E-Trade's putting that explicitly on their website. But here's another couple things to keep in mind. So first of all, if there are dividends, you can read the language around if there's a non-cash dividend. Let's remember what was APE. APE was a non-cash dividend. Had you loaned your AMC shares at that time, you would get cash instead of the actual APE. So that's, kind of a, hey, I don't think I would like that personally. And then check this language. Let's actually zoom in on this. This is, again, E-Trade's own language. So they're full on saying explicitly, hey, securities we're going to borrow from you, stock, can be used to help short selling. And look at this language, which could contribute to lowering the price. So really, I just read this as I'm going to loan my shares to shorts. I've just spent 2 years trying to stop what I believe is corruption in the way that people are shorting my stock and, frankly, stocks all over the market. Why would I then turn around and say, you know what, I've been fighting this fight, but why don't you go ahead and have some of my shares to help what you're doing on the corrupt side? Yeah, no thanks. I'm not doing that. You can offer me all the money in the world. And by the way, I was close to some people, one person in particular, who a year ago even tried to kind of sell me on this idea of loaning shares. Let's just say I'm not that close to that person anymore. So can I sell shares that have been loaned? Let's just cover, want to be fair and at least kind of make sure, I'm telling you I'm not going to loan my shares because I think why would I want to help the shorts? These are the very people who I think are cheating me. But, I want to be fair to you guys and at least present the facts. So you can sell your shares. So you can see, here's particular language you want to key in on. You retain full economic ownership. These are your shares, they're loaned. This is like if you gave your car out to someone to borrow and then, decided to sell your car. Only difference is if you gave your car out to someone to borrow and they somehow use that to make the value of your car worth less, it's kind of a problem for you. So then, yeah, sure, you could sell it, but now you're going to sell it when it's worth less. Not to mention we kind of have hodl culture anyway. So let's just kind of do a quick high-level summary. So what does this tell me? AMC is in crazy high demand, right? I just showed you 3 brokers who all have higher than, crazy high credit card rates, and in some cases almost like loan shark rates. It can impact the price of AMC if you're loaning to shorts. E-Trade's got that right there. Kind of interesting, in the early days, I'm talking like maybe March of 21 or somewhere, February, March of 21, I remember getting trolled. People would, basically hacks would try to jump on my tweets and try to tell me how shorting didn't even impact the price. But here's E-Trade themselves on the internet explicitly saying it could. You keep your economic rights, so voting rights, selling rights, all of that. I'm going to leave it at always do your DD. If you're thinking about this, it's your pocketbook, it's your wallet. I'm not going to tell you what to do. But as for me, it's just honestly kind of a gross idea. But really, I just wanted to especially highlight, this is my own email. It's not doctored, as long as you, I guess, believe me. These are really, really high rates. So interesting in light of everything we've been doing, and I just wanted to share that. Thanks.